Look at gold right now. It's sitting at 44.76, and almost everyone is looking the wrong way. The daily trend is a strong sell, the weekly has flipped sell, and yet the market is behaving like it's waiting for a trap to snap shut. There is one danger zone and one hidden opportunity right now. I'll show you both. Stay to the end because I'm giving you 3 exact levels you can trade tomorrow, complete with on-screen trade cards so you see every entry, stop, and target down to the dollar. Here is your instant verdict. Gold is in a fading bearish structure, and I am leaning short against the volume point of control at 45.06. That is the line. The single invalidation level that flips the entire bias is a daily close above 45.06. Write this number down, 45.06. If we close above that on the daily chart, the whole bearish structure resets and we are talking about a retest of 4,536 and possibly 45.71. Until then, every rally into the 44.96 to 45.06 zone is a sell opportunity. The herd is still trying to buy the dip because the monthly chart screams strong buy, and that is exactly why the pain trade is lower. The leveraged long positioning in futures is still elevated, and the market makers know exactly where the liquidity sits. The trap is being set for those who refuse to respect the daily trend. Do you think gold breaks 44.22 this week? Comment yes or no right now. I'm tracking consensus, and the results are often a contrarian signal. Let's walk the charts from the weekly all the way down to the 60-minute, because when you see the alignment, you'll understand why this zone is lethal. On the weekly time frame, gold has printed a sell signal after that massive run into the 4600 to 4645 resistance zone. The 50-week moving average is still sloping higher, currently around 4641, and price is now well below it, which tells you that momentum has shifted from impulsive buying to distribution. The weekly sell signal is not a collapse yet, but it is a warning that the correction has legs. Drop down to the daily chart. The trend is a strong sell. Price is trapped below the 20-day moving average at 45.41 and the 50-day moving average at 46.41. But the critical level is the 200-day moving average, sitting at 43.85, which is still rising. That is the big structural flaw. Notice how the moving averages are beginning to fan out bearishly. The 5-day at 44.81 and the 10-day at 4,503 are both sloping down, capping any intraday bounces. The daily MACD is deeply negative at -42, and there is no sign of a bullish crossover yet. The RSI at 41 is not oversold, which means there is room to fall further before we see any mean reversion. And here is what most traders miss. On the 4-hour chart, we have a nasty hidden bearish divergence. Price made a lower high near 4600, but the MACD histogram printed a higher high. That is exhaustion. Buyers are getting weaker on every push, and the follow-through selling after that divergence has been clean. Right now, gold is consolidating in a tight range between the volume point of control at 45.06 and the 4,422 support. The 4-hour 20-period moving average is pressing down at 45.20, and the 60-period sits at 45.65. Both are acting like a brick wall above us. The 60-minute chart is neutral, with the MA20 flat at 44.90, but the oscillator structure shows stochastics rolling over from 57, which typically precedes a bearish impulse if we lose 4470. So the technical picture is this. Bears are in control below 45.06. The daily strong sell plus weekly sell creates a gravitational pull towards the 200-day moving average at 43.85. The first support is 4,422, then 43.86, and the final line of defense is 4,347. On the upside, 44.96 is immediate resistance, then 45.36, and the ceiling is 45.71. Every one of these numbers matters. Gold is moving tick for tick with real yields inverting. As the US 10-year real yield popped higher yesterday, gold got slammed from the 4,600 area back into the 44.70s. This is the fear architect at work. Gold is not acting as a safe haven right now. It is a yield-sensitive asset that punishes anyone who ignores the macro tide. The next signal changes everything. Look at the 4-hour MACD again. It is curling down towards a potential bearish cross below the signal line. If that cross confirms while price is below 44.96, it will trigger a fresh wave of algorithmic selling that can take us to 4,422 within a session. That is your hidden signal. Yesterday's core news was simple but powerful. Gold stalled exactly at the volume point of control at 45.06, and it has been unable to chew through that level despite multiple attempts. The catalyst. Hawkish Fed speak overnight pushed rate cut expectations further out, and that sent the dollar index holding firm above 105. When the dollar refuses to break, gold struggles to breathe. The policy divergence narrative is back. The ECB may be cutting soon, and the Fed is in no rush. That yield spread widens in favor of the dollar, and gold, which pays no yield, gets sold. Now connect the dots to other assets. Bitcoin has been trading like a risk asset shadow, moving in lockstep with the S&P 500. If equity futures crack on NFP jitters, Bitcoin could lead the downside, and that risk-off pulse will either flood into gold or create a correlated liquidation. Right now, the correlation is negative. Gold is falling with equities, not acting as a hedge. That tells me the market is treating gold as a risk asset for the moment, and that is a dangerous environment for dip buyers. The 1 to 2 week directional lean is lower, targeting the 200-day moving average at 43.85. The event that kills this bearish thesis is a daily close above 45.06. If that happens, we flip to a range-bound mode between 45.06 and 45.71. But until then, the path of least resistance is down. The NFP print tomorrow is the wildcard. If we get a blowout number, real yield spike, and gold could test 4,385 within hours. If the number misses, we could see a short squeeze towards 45.36. But remember, even a squeeze gets sold into. Unless 4,506 falls, before I give you the 3 strategies, I want you to focus. Most people skip this section. That's exactly where the money is made. Keep watching, because I'm putting exact triggers, stops, and targets on your screen right now. No guesswork. Strategy 1. The sniper, conservative. This is the fade trade. The setup triggers when gold rallies into the 44.96 to 45.06 resistance zone, and then prints a clear rejection. I want to see a 1-hour candle close below 4,490 after touching 4,496 or higher. That shows the selling pressure is real. Entry is a limit order at 44.96, but only activate after that confirmation. The stop loss goes above the daily swing high and above the structural resistance. I am placing it at 4,536, which is above 4,536 resistance. That gives you room above the noise. Take profit 1 is 4,422, the first demand zone. Take profit 2 is 4,386, right above the 200-day moving average. The risk-reward on this is roughly 1 to 1.9 on the first target and 1 to 2.8 on the full run. This setup is completely voided if we get a daily close above 45.06. That's your invalidation line. If the daily candle closes above that, cut any short bias immediately to the sniper, conservative, entry, 4,496, 1H close below 4,490 after touching 44.96 plus, stop loss, 45.36 take profit 1, 44.22 take profit 2, 43.86 risk, reward, 1:2.8R, full, invalidation. Void if daily close above 45.06. Type your XAU or USD range for tomorrow in the comments now. Let's see who's aligned. I read them. Strategy 2, the active trader. Standard. This is a momentum continuation play for those who missed the initial rejection. The entry condition is a 15-minute close below 44.70. That level matters because it is the neckline of the intraday consolidation. Once we break 4,470, momentum algorithms kick in, and we ride the flush. Entry is 44.69 on a 15-minute close below. Stop loss is placed at 4,496, which is just above today's intraday high and the immediate resistance. That keeps the risk tight. Target 1 is 4,422. Target 2 is 4,386. Once target 1 is hit, move your stop to break even and let the rest run with a trailing stop of $15. This setup captures the acceleration that often follows a break of a well-defined range. The risk-reward is around 1 to 1.7 for target 1 and 1 to 3 for target 2, making it a solid swing trade. The active trader, standard, entry, 4,469, 15-minute close below 44.70, stop loss, 44.96 take profit 1, 44.22 take profit 2, 43.86 trailing stop, $15 after TP1 hit risk or reward. 1:3.0 are invalidation. Void if 1H close back above 4,490 before entry. Strategy 3. The aggressor, high risk. This is a counter-trend bounce play for those who can lose small and manage risk aggressively. The setup triggers at 4,422, the major support. We wait for a 5-minute bullish engulfing candle that closes above 44.28, showing that buyers are absorbing. Entry is 4,428 after that pattern prints. Stop loss is tight at 4,380, which is below the 200-day moving average and below 4,386 support. That gives you a $48 risk. Target 1 is 4,475, just below the current pivot. Target 2 is 4,500, the psychological level near the POC. This is a mean reversion scalp that bets on a liquidity sweep of the 4,422 support before a short squeeze bounce. I must warn you, this trade goes against the daily trend, so it can fail fast. Only take it if you are disciplined enough to cut it immediately if the 5-minute structure breaks. The risk-reward is about 1 to 1 for target 1 and 1 to 1.5 for target 2, but the win rate on counter-trend bounces is lower. Trade small. The aggressor, high risk, entry, 4,428, 5-minute bullish engulfing after touch of 44.22, stop loss, 43.80 take profit 1, 44.75 take profit 2, 4,500 risk, reward, 1:1.5 are invalidation. Void if 5-minute candle closes below 4,420 before entry. Never risk more than 1 to 2% per trade. No positions through high-impact news like NFP. Stops are non-negotiable. This is how you survive to trade the next big move, so let's lock in the single most critical level for the next session, 45.06. That is your bull-bear pivot. If we stay below, the gravitational pull to 44.22 and 4,385 remains. If we close above, the whole short narrative dissolves and we target 45.36. Tomorrow's focus is the NFP print. It will be a volatility bomb. I'll be breaking down the gold reaction and the S&P 500 gamma levels right after the number drops. If you want the full breakdown on Bitcoin and the S&P divergence, that video is live now. Tap the end screen. Smash like if this gave you a clear plan. Subscribe, hit the bell, and I'll see you in the next one before the market makes its move.